All right, good morning, everybody. Welcome to today's training topic on balancing and reconciling. My name is George Lesher. I'm president of Kajta Incorporated, and I'll be presenting today's topic to you. Just start out, our next training is balancing and recording, reconciling. A couple of things that we found during this, when I was doing this, is I contacted several people to try to get, what their how they did their end of the month reconciling. A lot of them have a lot of detailed, things written down. If you don't have any procedures or steps written down, absolutely make sure you get those put down to something to start with. But before I get started on, being able to reconcile your account numbers with everything, there's a lot of data hygiene or data analysis pieces that you should run every month just to make sure before you bother trying to reconcile inventory, for instance, to your distribution report. So let's just begin at the beginning, and we're going to come in here. This one's a little complicated to read, but basically I'll show you it in a minute. We're going to open your accounts. You're going to turn off the limits so you get all account numbers, even those have been retired. We're going to expand the account tree to see if you have any goofball accounts in there. If you do, you should identify those and either fix the transactions that are assigned to it, or absolutely, we want to get those out of your account tree, just because it just doesn't make sense to have bad data sitting there forever. Then we want to also set the filter at the 7th level on the search grid to remove the blanks. That gives you just 7 level account numbers. And then you want to filter by type to confirm there's no accounts that are missing a data type. You can also run, an account list report and sort by type and account, and those will give you the same thing. But that's what we're going to do first. Next, you should open up inventory and again go to the search grid and set the limit to all and review the type column to verify that there are no missing inventory codes with a bad type. Now, these are reports that you'll be running. This first one is transactions with undefined accounts. So what this does is it looks at your transactions, and any transaction that does not have a GL account number will be flagged in this report, and those can be disastrous for certain reporting to work correctly. So you want to make sure that you don't have any transactions that show up in this report. If you do, it's not that hard to fix, but generally they come off of mostly the A900s that we've been seeing. Out of balance journals is another good one. We have things that were posted that could have been an out of balance journal. And usually what this means is it just confirms that somehow we didn't get a effective date that was way out of whack for your time frame. So for that one, you want to make sure, again, you do it throughout the whole time. Data posted to disposed of equipment. This is another important one. This shows if you've had a piece of equipment that was disposed of, are you still posting fuel and labor to it? We want to make sure that we honor that disposal date. And if there is, it's probably there was something that was marked the wrong piece of equipment. So we want to straighten out those transactions. Inventory list by credit account is a nice report to run. It's a little tricky because you need to use the bookmark for it. I'll explain that to you. But this will indicate immediately if you have any inventory codes that are marked with like a road material marked with a 110 account, or a part marked with a 109 account for the credit account in the inventory. So this verifies that your inventory you're running will post correct values. Inventory postings before start date. You want to run this for the fiscal year to identify postings that are dated before the inventory start date. This is important for newer pieces of equipment. If you're bringing in something that has a start date, you want to make sure that you do not post anything before that, because it will show up in the distribution report, but it won't show the posting in the inventory status. So again, it's a quick report. Generally, you don't find too many of these in your system. Inventory credit posting to non-standard credit accounts. This one's important as well, because it checks to see that every inventory post that you did equals the current value of the inventory credit. Excuse me. So there may be some things that are a little off on your system. So again, what we're trying to do here is just make sure that any credit posting to a non-standard credit account is identified so that you can make the proper adjustments in the transaction to allow us to have a much better problem getting the right balancing when you're doing inventory. And then setting the negative balance filter on an inventory status report. While we're not running the inventory status to get dollars on this one, we are just seeing any inventory codes that do show up as negative values, and the balances in there. There's a couple of things that are important to note in there. We want to make sure that mostly parts are not negative. A lot of times road materials may need to go negative. It just depends on how your certain road commission operates. Really, technically, none of it should go negative, but there is certain circumstances where it will have to. And then finally, vendor inactivity. This is kind of an older report that shows vendors that haven't been used since the given time. So like if you run this from 2010 and there's no transactions to these vendors since 2010, you probably should mark them as inactive. And you can move that date up. I mean, the date is, you just specify what date you want in the report. But the idea here is that you can start looking and getting vendor list downs from the 500-600 that you might have to just 50 or 60 that technically you're really only using. So that way when you go into vendor maintenance, you're not seeing a lot of extra vendors that don't really belong there. So this, again, these are just data hygiene. The vendor inactivity is more of a once a year, but it doesn't hurt to be aware of. It doesn't hurt to run it. I give it kind of an honorable mention for data hygiene, but the rest of them, you definitely want to run those once a month. And generally you want to run it for the whole year and not for just partial years, with the only exception to that is the out of balance journals. Those that you should run to the end of your month, but always from the beginning of your fiscal year. Never, because since you can backtrack data in your fiscal year, you want to make darn sure that something didn't get backtracked and that would throw this out of whack. All right, so let's go in and see how all of these work. So I'm going to go ahead and switch to Pro Fund Accounting. And we're going to start with our first one, which was going into the chart of accounts, bringing up, making sure we have the limit set, and then bringing up the tree. And you can see here we do have a 512 number in here that's kind of whacked out, doesn't really fit anything, but it's still in your chart of accounts. It should get removed and taken care of, not just retired, but actually removed because there's and any transactions that were assigned to it should be reassigned to the proper account number. Then the other thing you want to do while you're here is you want to go to level 7, hit the filter, remove the blanks, click OK. This will give you just level 7 accounts. And then you want to look through the type to make sure that you only have the standard types listed here. If you have a blank or like a Q or a J or a K from old data, you want to make sure that we identify those, clear those out, and set them to the proper types, because that can drastically affect how certain reports are ran when we're looking at a variety of balancing. All right, the other one we wanted to do then is also you go into inventory, and we do the same thing here. We just come into the grid, and it's just as easy to do the search on the grid type to come in here and ensure that you don't have any blanks or odd grid definitions in here. So again, just make sure that nothing here is marked inappropriately. Next one, the next report, or the first report out of the bunch, is in General Ledger. So we don't go to Post, we go to General Ledger Reports. And in here, we are simply doing transactions with the unassigned accounts. So we come down here to transactions with undefined accounts. We run it. And a lot of these, I've set up just a hotkey for the save parameters. So you can just click it. The fiscal year pops in my range. I run the report, and I don't have any. So every transaction has an account number in the GeoTrans for the fiscal year. Out of balance journals. Again, similar thing. Here, on the other hand, you do want to run it to the end of the month so that when you're viewing the um, part, so we're going to go to 7/31 of 2026 because that's I'm doing the month of July, so I want to make sure that that month has no out of balance journals, and indeed I do not. It's not likely you do, but sometimes you could have something that spans a month. So if you run a distribution report, you have to be careful because a journal might show the data, whereas a distribution might not have it yet. The next one we have data posted to, and that one is in equipment. So we go to the top of equipment. We have data posted to disposed of equipment. Again, this one you should just run for your whole fiscal year just to do it. Again, I got a lot of little hockey. But the first part is what level 3 numbers are we going to look at? So I look at 510, 512, and A9 and the 900s to see if there is any postings here to something that was marked. So I run this report, and indeed we have one AP for going to a piece of equipment that was disposed on at 8/19 of 2025, but we have a 7/24 transaction. So most likely this is the wrong piece of equipment to be used on this, and so we should bring up journal 8510 and fix that piece of equipment to be pointing to the proper chunk of equipment at that point. All right, so the next report that we have that we did was inventory list by credit account. So this is our first of the inventories that we do. So we're going to come over to inventory reports. So we do inventory list by credit account. And again, I told you this one's a little bit kind of goofy when you run it, but you'll see it in a minute. So when you run this, you're going to want to set up parameters for each of the types you have. So let's we'll go to parts. We're going to just run it for parts. And as I look here, I'm not looking at the data of the report. I'm really looking at the what numbers they're assigned to. So these are all the 1 to 10 numbers that we have assigned, credit account numbers that are assigned to every one of my parts. So I kind of look at that to make sure I only have parts in here that are supposed to be 110. I don't have a 109 or some other part. So then I go back to parameters. I run it for road materials. Oops, it looks like I have one road material that's marked to a 110. So we can click on that, see what that is. We probably want to deal with something about Cult 72 poly, whatever that's going to be. My guess is if it's a road materials, it should be to a 109, but right now it's coded for a 110 piece. So that should get repaired and fixed in inventory maint. And then finally we run fuel. And you can run other ones too, state, things like that. Just again, the thing you want to make sure is you know what account number should be. So if all the fuel is listed under 2 and 3, we don't have any 109s or anything else for fuel. The next report is inventory postings before the start date. So let's see, here we go. Inventory postings before start date. This again catches any piece of equipment before the start date. We're just going to run it for the year and we don't have any. So all of my piece of equipment start date are, we don't have anything that started. We posted before that start date by any reason. The final one is inventory credit to non-standard credit accounts. Inventory credit to non-standard accounts right there. All right, so again, fiscal year, you can just run it, and I am clean on that. Now I'm going to go back and just rerun this for, I'm going to go back a couple of years and just rerun this for something like August 2024. You can see that there has been, over the course, changes to different, again, what happens is if I were to go look up this part number for the wing 9 foot, I'm just right now, I doubt it's posted to 04. It's probably a different account number. So this shows all transactions that are posted to an inventory code that has a different credit account number than what was posted to. It's just a good reference check. It will help you when you're finding those weird, odd numbers that show up in the piece. Next, we go to inventory status. And again, here, this is just to show for this phase of inventory status, not the inventory status that you'll be running. Our highest date to figure will be 12/31. Now they have a bunch of things here for other things, but like I said, 12/31 for their balancing. These are all ones that they have set up, but I'm just going to go to 12/31, and then down here there is a spot where we'll show all negative quantities, and you want to select show only negative balances. And when you run this report, you shouldn't have a ton if you're doing a good job on the inventory and you don't have a lot. You might see your road materials, so you can exclude road materials in the report parameters. But for the most part, this should be pretty clean. Just takes a little bit to run. And here you go. So we have a lot of parts that are marked as I. These are ignored, so they don't really matter too much, but it would be a good idea to double check what's going on these to make sure somehow they're not interfering with anything. Looks like we have one road material or a pit that's negative. That can happen. We have some salt. That's a state. That probably shouldn't happen. So my guess is somehow somebody posted labor to state, and that doesn't really happen. You're not allowed to do that. But again, whatever. Again, these are just indications to things to look at to make sure you have cleared out on hand. If you still have questions about any of it, you can give us a call. We'll be glad to help sort things out for you and get you pointed in the right direction. The final one is in payments, payables, and that's the vendor inactivity list. So it's called AP vendor inactivity. And if I run that one and I select, let's go back a few years. So we want to go back to, let's go back to anything that was 2010, January 1st, 2010. And then I'm just going to go ahead and run that for everybody. But I don't, if it's already marked as an inactive vendor, I don't want to see it. I only want to see active vendors that have not been used since 2010. So if I run the report, we have a page full of vendors here that probably absolutely are never going to get, selected again inside of our system. So you might want to mark those as inactive. And again, I went back to 2010. If you think 2015 is anything since 2015, it's a judgment call. When you mark a vendor as inactive, it doesn't make it go away. All it does is keep it out of the list for you to visit and see. So it really helps when you're going through vendors and doing things like setting 1099s and setting I-9s or not I-9s, but W-9s and things like that for vendors to validate them. You have fewer to go through than these really old ones. Okay, so that takes care of going through the balances. I'm going to go back to the PowerPoint. So obviously you want to do this data hygiene and get through all these things cleared out as best you can before you start trying to balance like inventory to the 109 and 110. So again, like I said, I spent some time talking with several road commissions that have been around, where their directors have been around. They all had great list of things that they check and double check. So I'm going to kind of go through, every road commission is a little bit different in how they manage things. I just want to get the main things out that should be validated and checked before you get along too long in a month or at the end of each month, so that there isn't a big surprise at the end of the year and all of a sudden we have lots and lots of calls and we got to fix stuff that happened in the first quarter of a thing. We got to redo a 941 and all that kind of stuff. So we want to make sure that as much as it's done. So our first one is just checking to make sure if you have any unpaid payroll transaction that it equals the 257 or what's considered your accrued payroll account. Real important. There's also some other things that could be there, but the idea, the first thing is that should balance to zero at the end of a payroll cycle before you post any new payroll. But if you have posted payroll, it should equal what the unpaid transaction shows. Similarly, there's the equipment that's been posted to should be balancing to the 669 account. Both of those should be validated and worked through. The open invoice report shows all the unpaid invoices. It compares, that should be compared against the 202 or your accrued payroll account, as well as the discounts earned. So there's a discount earned in here that might need to be looked at to verify too, but not a lot of places do discounts anymore. Then finally, the big one has always been inventory status, comparing the proper inventory codes to the 109, 110. A lot of places have, a whole slew of ways they do this. It can get very comprehensive. But failure to do this, or to do this only at the end of the year, can cause some significant issues, especially if something got out of whack at the very beginning of the year, so that you might have been doing something incorrectly or paying a different dollar rate throughout the year. So you end up, either overcharging or undercharging your customer, the townships for the materials. Finally, you want to verify the 111 balances to unpaid inventory invoices. Now, what that means is 111 is where we do the clearing account. So if you receive inventory, the back eye can receive inventory. When they put in their dollar amounts for the receive, that goes into the 111. When the AP comes in, it's supposed to balance to the 111. Keeping that in sync and in balance is a little bit tricky. It requires a little bit more communication on the invoices and the possibly the packing slips. So you want to make sure that the back office and the front office, or the back room and the front office, keep that in balance, and it really should remain very close to zero. It shouldn't have a great big huge number if it's properly managed. Okay, so finally, we're going to run into how we do bank reconciliation. And bank reconciliation has a lot of cool stuff in it. We're going to be doing a quick run through of it. There is some interesting things you can do when you're first setting up bank reconciliation, and I want to get to that in just a minute. All right, bank reconciliation. Let's talk about a little bit before we go into it. First is the goal of a bank reconciliation is to really mark your checks, deposits, ACH, and other transactions as being cleared by your financial institution. You generally get this information via a paper form or an electronic email or a PDF of your bank statement as of a certain date. It will show all the transactions that are been cleared by the bank and a dollar amount that you have in your bank. And to verify that, I mean, a lot of us have done it. It's just, I want to cover what the goal here, so we remember this isn't designed to be an automated task for what we're doing. We're just billing something because a lot of places have their bank information spread between different account numbers, different banks and statements, financial institutions. It's the same bank, same checking account, but they have one side for AP, one side for payroll, things like that. So it's not really simple to do and put it all together. One of the things you want to make sure, though, before you get started is that we do have financial institution with some starting balances and some good hygiene is what I'm calling it. There's also a lot of tricks to getting it to work fast and quick and right, so it doesn't take a long time. I know a lot of places they'll go into it and it's 25, 30 minutes just to get their first screen up. Doesn't need to be that way. There's some things we can do, and I'll show you those tricks, or those settings at least, so that the performance will be pretty snappy. And then when we're first starting, if you're going to just pick this up and start to try to use it, you want to make sure you have a good starting date. So I'm assuming right now you're doing something either in Excel or on pencil paper for verifying that you have no outstanding checks, or you have a check from 4 months ago that's still outstanding. But before that, everything is already been cleared and good to go. So you need a good starting date to say, what's the earliest date that we have where we have an outstanding check? And we'll kind of cover that. Then you want to set the starting date in FI to be the day before the earliest open balance, and we'll get to that as well. And I'll show you how to go that when you get started. It's pretty straightforward, and it just makes everything work a lot faster and smoother when you do it. And then one thing to point out, if you get interrupted in the middle of this, you can just save your current settings, and it will bring back then what you have checked and reconciled in the list. Because usually you have, between 50 and 60 transactions, so you might have gotten through 15 or 20. And then, oops, you got to go and close this and go into something else. And when you want to come back to it, you want to it will remember what those 20 that you last did per the bank is. Also, there's an unreconciled. So if you accidentally have transactions that you reconciled when you shouldn't have, you can go back and unreconcile those if you need to. Again, unreconcile has its own set of little tricks that you can do. I'm not going to cover that in detail, but I'll show real quickly how it operates. But again, we have videos on that and other things, and you can always call us and we'll help you through it. But today it's just bringing you up to speed with kind of what bank reconciliation is supposed to do and how does it work sort of behind with the things that we have. All right, so before we jump into questions and answers, let's go back to Pro Fund Accounting and let's start working on bank reconciliation. So to begin with, we have financial institutions, and we have three. I have Milford Bank, Kalkaska Bank, and Jasper Bank. So Jasper is the bank that they were using all of their APs out of, so that would have been like AP Bank, and Kalkaska was their PR bank, and Milford was a very old bank they had that they never used. So if we go in and look at Milford Bank, he has a starting date of 1/1 of 2026. So we're going to go into him and we're going to go ahead and say, okay, what transactions for Milford Bank? So we'll go to bank reconciliation. We'll go to Milford Bank. Our statement date is today. So we'll find what transactions, and there's no transactions for Milford. So basically Milford Bank hasn't been done. But we're going to go into Jasper Bank and we're going to do the same things, and we're going to notice Jasper Bank doesn't have an opening balance. So we got to give Jasper Bank an opening balance. So let's go to Jasper Bank and see he does not have an opening date. So we're going to give an opening balance, and I just usually say 0 and an opening date of, and we're going to go back because we're going to start using Jasper Bank, but we in our system have one check that's open for the 22nd of April. So we're just going to go to April 1st and say we want to first close and reconcile every check from now to the first. We don't really care what the numbers are. We just want to get them marked as reconciled because we already reconciled them by hand. So we're just going to go ahead and do that so that when we start on 4/1 of 2026 for the opening date, it will work correctly. So I'll show you how to do that. So we're not going to set that here right now. So we're just going to save this. So Jasper Bank still doesn't have an opening date. We're going to set the opening date to 1/1 of 2019 of 1990. There. All right, so we're going to go ahead and save that. So it's going to start looking from 1990 until today until our statement date for all transactions in bank reconciliation. So we're going to come in here. We're going to go to Jasper Bank. We don't care about the starting or ending balance. We just care about the statement date. And again, because I had something in April that was still open, I'm just going to go to the 1st of April. So actually, I'll go to the end of March. All right, fine. I can't type it, so there we go. So the end of March, we're going to do all transactions. It's going to take a while. So if we do this and we let it cook for a bit while it's doing it, again, the idea here is we're just trying to set all of these old transactions. We got stuff from 2003 we don't care about, but we need to mark them as being reconciled so that we don't keep looking at those every time we do a bank rec. That slows bank rec down because we can skip it if it's been reconciled. We can just go right past it. And I'll show you kind of how that works. So, but we've got a magical number here, 77,154.036 to do it. And in order to set something reconciled, this has to equal 0 on this difference. So we're just going to put that exact same number into the ending balance. And when I do that, I end up with a difference of 0. So once it's 0, you notice the button at the bottom changes to reconcile. So boom, I'm going to reconcile. So this is just setting it up so that as we go forward, since we're going to start from 4/1 of 2026 going forward for bank reconciliation. So now I've been fully reconciled all the way up to that point. I can go into my financial institutions. I can go to Jasper Bank, and I can now set the starting information to 4/1 of 2026. Okay, once I type it. All right, so there we go. So financial institution set, Jasper Bank is set. So now when I go to bank reconciliation and I want to reconcile Jasper Bank from now to today, when I go to find transactions, that's how fast it is. It's ridiculously fast when it only has to look at 2, 4, 5 months worth of data. If I had to go all the way back to the dawn of time every time or back 5 years because that was when the start date is for the bank, I end up having to look at 5 years worth of data. So it takes a while to go through and recognize that most of it's already been reconciled. So again, here we have our checks that we can come in and you can, like every time, reconciliation isn't that hard. You just check what it is. When that becomes a 0, then you can do it. If in the middle you get interrupted, you can save for later. And so basically now it's been reconciled, or it's been saved for later. They haven't been reconciled, it's just been saved for later. So if I go back to Jasper Bank and I go find transactions, the ones that I've already checked will show checked again. Real straightforward. The only difference is we don't keep track of the starting and ending date for right now, but there's some reasons we don't want to do that just yet. But once that's, eventually those will happen. But right now we're not trying to automate this. I do got some work, I do have some information to be able to reach into every bank and grab their version of statement dates. So I've got work to do. And once I get that done, we'll be able to probably do something like that, but not until much later. But it's on the plate. So, eventually at some point we're going to have this a little bit more automated for you. The main thing, though, that we're doing right now is just trying to get it so that these things are quick and easy. The biggest note to take here is that start date is important to keep that. So like here, I'm probably going to have all of this month done. I did go to 8/1, so technically I probably shouldn't have gone to 8/1. I probably should have just gone to. So it was April 1st, so May 28th. Still has those checks, so I'm just going to check them all. So that would catch me all the way up until those, but basically the ones that are closer to the end are most likely. Let's say 2 of these didn't clear. These vendor checks weren't paid, processed yet by the vendors. So eventually this gets to 0. When that gets to 0, you would reconcile, and then you could change in the financial institutions the start date to be 5/1 if you want. But I usually tell people just, it's not that a whole year doesn't take that long. It's really quick. So, maybe twice a year, make sure you set it, to a later date when you finally can, because you don't have any transactions that are outside the range. And then just be careful when you're unreconciling a transaction to not go past the date range of the start date, because you'll never see it as unreconciled. So there's some caveats about it. But again, it can really help speed up the process when you're going to finding these transactions so they don't take a long time. We've also had some issues on some of the transactions because it turns out with the new Empower, there's a place where you can spend, and the new Empower has you upload 3 different dollar amounts to them for different parts of the retirement. And it all right now in our payroll, you only craft it under a single deduction code. So the different reports break up that single deduction code into 3 different parts that get loaded to them separately. In which case, what happens in your bank rec is you see 3 transactions, but here you will just see the 8 payroll transactions. So if we go to Kalkaska Bank and I just go ahead and say find transactions, again, it took longer. Probably because I don't have hardly anything there. My statement date was this, but if I go to the financial institution and look at Kalkaska's his opening day was 4/6. So yeah, let's change that. 2023. Here we go. So we'll go back a few years. We'll save it. We'll go back to bank rec. Go to Kalkaska. Find transactions. And it takes longer because I'm going back now 3 years. You can see the difference. If it's only going back a year or just a couple of months, it's really snappy. But going back 3-4 years, it can be quite cumbersome. And again, I don't think this database they were using our bank rec. So you may want to start using it, because if a transaction is reconciled, we don't let you void it. We don't let you do other things like that because it's showing as reconciled. So you'd have to come here and unreconcile to void it, because you've already set it, clear. Ooh, got a good long wait. Okay, finally. So again, we went back to 2003. Like I said, they haven't really been using it, but just to kind of show you, you end up with deduction checks here that were generated, and one of these could be split between 3 different payments but you're just going to show, it just shows as one deduction check coming in. So again, just be aware that this is possibly the case that we would have in our payroll or bank rec. All right, so again, if you have any issues or questions, feel free to call us or talk to us. And I appreciate everybody for attending today, and I'm going to go ahead and end it here. Thank you for your participation and showing up today. I really appreciate it. Everybody have a great day.
You are now working smarter with ProFund Accounting. Thanks for watching. Be sure to like this video and subscribe to our channel for more content like this.